All right, so I'm going to go over my strategy that I use to day trade on. It is a combination of using the 13 period exponential moving average and the 48 period exponential moving average. So what I'm looking for here is I'm looking for a crossover. And as you can see, I only use the 5-minute chart because I primarily day trade. You can use a bigger time chart if you want to swing trade, but I have just back tested this against day trading, specifically with the SPY. I have tried this against QQQ, Tesla, Nvidia, Apple, Microsoft. This strategy does work for all of those stocks as well. So the big thing here is obviously these are Heikin-Ashi candles. The only reason why I'm using Heikin-Ashi candles is for exit signals. So as you can see here, this was from Friday, August 30th. And as you can see, one of the first rules I have to this is we're not doing anything before 10 a.m. We're going to wait till at least 10 a.m. before we even consider doing a trade. I don't care about pre-market or after hours. I'm not looking for the crossovers there. As you can see, we had one bright and early that morning. To me, that doesn't count for the strategy. So 5-minute Heikin-Ashi, as you can see here, at 11:10, we had a crossover. We had a cross down. The 13, which is my green line here, went below the 48 exponential moving average. So this would be an entry point. Okay. The 200 period moving average I also have here on my chart, and the reason for that is it historically either gives a stock a support or resistance. Now, there are times where it does break through it, and then this is one of those cases. So where this crossover happened pretty much at the same level as this 200 period exponential moving average, it will be something to maybe wait till we see this next candle that does indeed close below it. Now, if we switch the candlesticks back to a standard candlestick, we can see that whenever this crossover happens, we are right here at the line. We've already closed one candle below, one candle above that line, and then we have one that closed right at the line. And then the very next candle, we close below it. So at this point, we can see that it is not getting support at all from the 200 period moving average. Now, I'm going to go back to Heikin-Ashi because part of my rule set is the first green candle you see can be an exit point. If you're looking for a way to find, okay, well, when do I get out? If I get in here, when do I get out? Now, some people go off of percentages. I'm up, especially if you're doing options contracts like what I do. Hey, I'm getting out once I've got 30%, whatever. To me, sometimes it depends because it depends on how big the move's going to be. And you don't want to miss out and leave money on the table either. You don't want to get greedy, but you don't want to leave money on the table. And let's just say you got out here and you only made 5%, where if you'd have gotten out here, you would have got 30% or something along those lines. And these are just hypothetical numbers. I'm not exactly sure what exactly this move made in particular, but just giving an idea. So this would have been the entry. Again, you could have waited for that confirmation to make sure that it wasn't going to bounce off that 200 exponential. Once we see that it didn't, let's just say you got in here at 560, for example. The next green candle isn't until over here at 558.90. So you can see there, that's a pretty substantial move. Pretty much 559 from 560, 50, so $1 to $1.50 move there, which in the options world would have been pretty substantial. As you can see, we got another crossover here. Later on in the day, right here at about 240, you see it crosses up. There's that 200 period moving average again we need to be mindful of, and then boom, it breaks it and it goes all the way up to about 560.50. So this move here would have been, pretty much right at $1. And then if you didn't want to sell here, you could have held obviously longer as it continued to move right on up. I'm very cautious about beginning of the day and end of the day because a lot of volatility, especially in SPY, it can drop in a matter of a minute. It can just take off in a matter of a minute. So just something to be mindful of. Again, something else I look at is I actually draw levels. And you can see here, you might say, well, how did you get these levels? How did you get these numbers? Pretty simple. We go to the daily chart. Again, we're staying on Heikin-Ashi candles. You can mark these out with regular candlesticks, but where I trade off the Heikinashis, I just pretty much just leave it standard. So the simplest way I know how to explain this is I'm just marking the tops of these candles, the solid part, not the wicks, but the actual solid part of the candles. And what you'll notice is you start marking these out. I bolded this because we've got 2 touch points. If it's just 1 touch point, I normally just leave it just standard line. You can see there's top there. This one I could probably bold because we've got, 1. You might could count that as 2, maybe 3. 3 or 4 candles that actually touch that. So this one, we could actually just make it note of it that it may need to be bolded for future reference. Now, if it's something that's pretty close, I might can mark this 559.63, but we've got one literally 30 cents below it. That's pretty close. I try not to get the lines too close together. But yeah, basically I'm just marking the tops of these candles. As you can see this right here, if we mark the top of that, we hit this one, we hit this one. That's two points of interest there. Above it, obviously we've got 1, 2, maybe 3. You could count that. So very, very close together, those 2 levels. And you can see we've got a gap here. There's just nothing really going on. I don't mark the bottoms. I only mark the tops. And so what you'll notice is when you go back to your 5-minute chart, now all of a sudden these levels, they mean something, right? We bounced off here. We kind of wicked up on this level, and we're coming back down. Again, we go to, this would have been Friday's day trading day. We bounced off this level. We bounced off this level. Now all of a sudden you'll notice areas that are forming support and resistance. Now you could get rid of these middle lines if you don't want them, if they're not really holding any value of support or resistance. Again, this is just to give you an idea of exit points. So if you're in a trade and, if you're in that trade from Friday, the first one where it came down, you might have been looking for an exit right here, which when I took the trade, this is exactly where I got out, was right in this candlestick here. The reason for it is I seen this level coming. We already broke through this level and we're just heading down, but I knew that at some point we're going to bottom out and it's going to try to make a pullback for a rally potentially. So I always want to protect my money, make sure I'm good. So, like I said, I got out, I believe it was this candle where I got out. I bought a contract for a put. It was it was $23 for the contract, and I sold it at 52. So we're literally talking about almost a double move from, or right at a double move from, 11 o'clock roughly to 11:35, so somewhere right around 20 minutes. It's not a bad trade. And then I didn't end up taking this into the day trade. I'm very cautious at certain times. This one would have been okay, but if, I've seen them happen at, 3 o'clock in the, end of the day, like this right here from the 28th. This would not have been, in my opinion, a smart trade. I mean, you got 15 minutes left in the trade. You would have to swing it in hopes that it would continue, which you would have lucked out in this case because obviously it opened, it continued even higher. I just think it's a high risk because so much can happen overnight. This one from the 29th, that would have been last Thursday, and I'm pulling up the calendar because I believe there was a reason for that drop. On, what was that? What day was that? 29th. Yeah, we didn't have any news come out on the 29th, but sometimes you need to be mindful of when news does come out because then all of a sudden it just plummets one way or the other. So again, just to kind of recap the strategy, we're looking for the 13 to cross either above the 48 or cross below it as an entry point, and then from there you can kind of fine tune it as far as your exit point. Again, that's why I do Heikin-Ashi. First time you see a green candle, if it's going down, first time you see a green candle close on the 5-minute, go ahead and get out. You could also use levels as exit points. It's really up to you. I just think that the green candle move protects you. However, there are certain times that, um, if I go back a few days here, no, it wasn't too long ago that we had one. Uh, doo, doo, doo. So sometimes you'll see it where it crosses, and then you get a color candle very quickly after that kind of would give you the idea of you need to sell. And if you want to protect your money, by all means. Sometimes though you can get like for example this one. Okay, we cross right here technically on this candle. Okay, so if you would have got in on a put at 561, 2 candles later we get a green one that prints. So you might say, uh-oh, you could still get out, either break even for the day or what have you, or you could hold and see what the candle after that. Because even though we got that green candle, it's almost at the same level we bought at. So probably I didn't take this trade, but if I would have waited to see if we got 2 green candles in a row. Because if we got 2 green candles in a row, it's potential we're gonna go right back up. However, you can see that the space each candle it prints is getting wider and wider between the 13 and the 48, which means it is still where they're separating. It means it's getting it's going more in that direction. So in this case, where it's going down and they're spreading out, that means it's taking a sharp decline in the price. And again, if we flip back to candlesticks, we can see that, right? We got a massive red candle here, and we're not getting too much green to push it back. Every time we get a red candle, they're bigger than the green candles. And then also here we got a big boom boom candle here, followed by several red candles. So yeah, we got the green Heikinashi that printed right here. But my opinion, you could have waited just a little bit longer. You're not going to lose that much money, even if it does print another green candle. You could hop out real quick, like, nope, play's not working. But in this case, you could have held strong and just, if you could have made it through this gap, you would have made, you would be, 561.20s down to 560.70. So, pretty good move there. Pretty good profits, but obviously if you would have waited till this big flush, we went all the way down to 557s. So this is just kind of an overview of my strategy of what I've been doing. I've been back testing against the SPY mainly, but I've looked at QQQ. Here's QQQ from 827. As you can see, the cross up. You would have went from 475.50s all the way up to 477.50s. 2-point move. I mean, you can't beat that. So again, this is just my strategy that I fine tune that works for me. Let me know if you have any questions or if you see anything that we can fine tune this even more with.